Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live or post videos like these, tap the bell. And if you want to join our community, the UVH fam, hit the links below for our free options trading group and our Discord. I post all my trades in there. People will talk, you can ask questions, whatever. Just join the community if you want to. That being said, I'm gonna go over one of the things that I get asked a lot. Like in the videos during the live streams, I get asked like, "What do you mean by support and resistance?" And this video is geared towards more the beginners, kind of teaching you the basics of charting, not necessarily options, just charting in general, and kind of like what do I look for when I'm quickly scanning a chart? When I'm looking at SPY here, what am I looking for exactly? You know, if you're just starting out, it's definitely, I would say, pretty confusing. You see all these bars, green, red, up, down. What does it mean? What do you look for, and how can you translate that into a trade rather than just kind of randomly picking? And when it comes to options trading, I know, for instance, I'm more profitable when stocks are operating in a channel, like we were a few months ago, in which we currently are in now. But just to kind of give you an example of, I'm going to go through some stocks, kind of go through some of the areas of support and resistance, and kind of what to look for on a chart. Now, I'm going to use the 1 year chart here for an example, but you can use different charts that you want to, depending on how aggressively you like to trade. I like to pair the 1 year chart with the 15-minute charts. As you can see over here, all my charts here are the 15-minute increments here. I don't trade in anything less, and that's just the way I like to trade. Some people trade 1 minute charts, 5 minute charts. It all depends on how aggressive you want to be, and what works for you. You kind of gotta play with it. You gotta develop your own recipe for the lemonade, and then start making the lemonade. Anyways, so kind of looking at this chart here, what I look for, areas of support and resistance when looking at a trade. So I'm always comparing the 1 year chart with the 15-minute chart and trying to see, what's a good price, where do you want to go, because you don't want to just put a trade on and hope for the best, because that's not a very good, it's not a plan. So when you're trading, you need a plan. Whether you're taking a profit or a loss, you have to say, okay, at this price, I'm willing to take profits, or at this price, I'm willing to take a loss. And a lot of people, what they do is say, hey, I'm going to put this trade on and I'm going to hope for the best. And they're like, hey, I'm up 50%. Should I take the trade off? I think I could get more. And then maybe they do get more, or a lot of times they do lose. So if you put a trade on and you don't have a plan, it's not going to work out for you long term. So a couple things that I'm looking here at for in terms of areas of support and resistance when trading is, on this chart you kind of start to kind of identify things pretty quickly here. Key areas that I'm noticing is right in this area here, right up in this area, right up in this area, these right here, some triple tops, and then down in here as well, and then around here. So I'll draw those out for you. When you're trading these channels, kind of what you're looking for. And I'll kind of cover this first, and then I'll go like more long term. So like this we made quite a bit of money when we were option trading, because it was trading in a channel like this. And what you're looking for here is, let's just kind of draw this out for you. And then we'll come over here. So as you can see, as it's coming up towards the top here, it was hitting the tops here, and then it would fall, hit the top, it would fall, hit the top, and then it would fall. And this area up here is what you would call resistance. And then as it's falling, you're looking at the area down here. When it falls, it catches it. So it finds a place to stop. And this is what you call an area of support. So an area of support, it could be a long-term area of support, it could be a short-term area of support. Obviously, this is very, very short-term, over a couple months, but I'm going to go over some scenarios where, hey, support could have been 2 years ago developed there, or a resistance could have been like a long-term resistance. It happens. This is a very short-term support and resistance, as you can see here. This is not very strong support. It's just where it's been bouncing at. So typically what you would want to do is, hey, when it comes up to here, obviously the first time you're not going to know it in terms of fail. So try to bounce here. We can start here as well. You can kind of see how this plays out in terms of support. So if you're looking right here, it developed some support back here. When it fell from up here, it came back to that support, which is over here. And then it tried to bounce, and then it failed. Obviously, this one, I probably wouldn't have shorted this because you wouldn't have known that this was going to be the first top. And then it came back down. Like this would probably been a little bit tricky to get a hang of, and a lot of this stuff was news induced, so it gets to be very tricky. But you want to kind of look at what the news is and what the chart is saying to you before putting a trade on. But I'm not going to get too much into that because we're going to go down a hole right now. I just really want to talk about support and resistance. So, in terms of the support, came down here, and then what I would be looking at is for a bounce to kind of retest here, and it did. So you'd probably want to go long down here, as you can see, long down here. And if you're looking at this, you probably wouldn't have gone long here because you would have thought, oh, it failed here, it might come down here, like what happened over here. It broke this resistance and it came back down here. So what you want to do is, once it starts bouncing, you want to see if it's going to retest this area, and it did. And then either you could put like a strangle on or go short, and then see if it comes back and retest this area, which it did. And then it actually retested this area again before it came down here, tried to bounce, and then failed. Like one of the traps that I think would have been is, if you're looking here, this would be called a triple top. One of the things that you would be kind of worried about is, how many times is it going to be operating in this channel? I mean, it's not going to go forever. I mean, it could go on for some time, but it hit it 3 times, hit this bottom 3 times until like the 3rd time it retested it. It came back down, or others may say it retested it 4 times, depending on how you look at it. I mean, we're all given the same data. We all read it a different way, and that's just the way it is. You may see things that I don't see. I may see things that you don't see. It's just the way it is, It's just the way it is. Kind of going back to like a yearly resistance, if you're looking back over here, definitely important right here. So this right now is a 52-week chart here. So when SPY was failed up in here last time, it came all the way down to 233. When we had this, epic run, you definitely want to be mindful up in here if it was going to fail. And as you can see, when it retested these lows up here, when it came back from these lows down here from 233, made a run up to 280, came back here, and it definitely failed again. It came back down to 270, 271, and then it came back up. So you want to take a look at this. You want to take your time when the market's closed. You want to take a look at these these charts and get a feel for what you're looking at, because trading is much more than just pricing, numbers, and news. You want to take a look at what these charts tell you. You want to spend the time. A lot of people are saying, like, how do I get better at trading? How do I'm terrible at trading. I just can't seem to get a hang of it. Well, are you putting in the time after hours? Yes, you may sit there. It's exciting to watch during the market hours when things are moving up or down, or whatever the case is. You're making money, you're losing money, and it is exciting. It's exciting. But the real work is put in after hours. Right now, the market's not moving. I mean, the futures are moving, sure, but right now the market's not moving. Gives you time to breathe, gives you time to concentrate. If you don't have positions on, you start evaluating the market. Okay, at what price do I want to put a trade on? What type of trade do I want to put on? Because when it comes to options, there's a time and place for every strategy. There's a time and place to buy a strangle. There's a time and place to put an iron condor on. There's a time and place just to put a vertical put spread or a vertical call spread on. There's a time and place for everything. So that's why you kind of you need to spend the time to kind of figure out what's going on. The other thing is that I would look at here more recently, as you can see, the market was downtrending. Definitely down here was interesting. Let's go over here. Here's another area of support, and like I said, I wouldn't say it was like strong support, but it kind of correlates to back here. Touch down here. And when you're looking at areas of support and resistance, you're not necessarily looking for the exact price, or like, oh, it didn't come down to exactly 272. Maybe this bar closed, it touched it, but maybe this bar closed at like 274, 273. When you're looking at support and resistance, I kind of give it a few dollars here and there. Yeah, maybe sometimes it does hit it exactly. I've seen it hit it exactly, maybe not to the penny, but to 25 cents, 50 cents, somewhere around there. But you're never going to hit exactly. You just kind of want to look for areas, and if this is coming back down into this area where it's bounced in the past, you definitely want to be cautious about going short. Versus going long here when it comes back up to here. When it comes back up to here, you want to be cautious of, hey, last time up in here things didn't go so hot. There's some resistance, meaning there's probably some sellers up there. Let's see what happens. And sure enough, came back up here and fell back down. So hopefully by the end of this, you'll kind of see. We're going to look at some different charts. I mean, that was kind of an easier chart. The SPY is an easier chart. If you're looking at like Facebook, it's a lot it's a lot different. I mean, they had bad earnings. They had scandals. I mean, the things that mess. So you're like, how do you read this? So for me, like, this is very, very, very sloppy. Like I've really only been trading it the last few months. I haven't really been trading it that much, but when it starts to break down or trend up, you definitely want to take notice of what's going on here. And immediately, I'm focusing like on this line right here, 160. So I just drew that line there, area of support. And then we can come up here to like the resistance area. So, this is definitely what I'm looking at, and this I would say is like developing stronger support. It was in this 160 area for a while, kind of went up but gravitated back towards it, went up, came back towards 160. Same within here. It fell to 123, came back up to the 160 area, tried to break out, then revisited the 160 area. So this would be more, I would say, developing stronger support. So it's something that you'd want to take more seriously. So in this trade, like for right now, they had good earnings, popped up, then started coming back down, and came back down to 160. And when it comes back down here, even if like the news is bad and things are going on, you want to take notice of this 160 area on Facebook, because it's known to bounce here from time to time. And maybe you don't really care if it goes back up to 170, or maybe you just want to go to 165, depending on what your trade. If you're trying to scalp or just trying to get a couple dollars out of it, we did make some money this week on Facebook playing this exact scenario. The bounce off of the 160 area, came up to 167.50 today, so it fell down to 160, came back up to 167.50. So, definitely want to take notice on that, on those key areas of support, and that's kind of how you identify is when a stock kind of hangs around the same price for a long time and it just keeps going, it's most likely developing some sort of support or consolidation, and kind of like as the range gets tighter, it's bound to break out either to the upside or to the downside. So the longer a stock stays the same price, kind of like the more dangerous it gets, I would say. However, when trading options, you just want to be careful that you're not trading like 2 days from now expiration. Like if the stock is staying the same price for a long time, and if you're not selling options, you want to push it out 3 months, 6 months to make sure you capture that move. Apple's another one that we recently looking for areas of support here, back down here, which is another bounce. Let's see here. So if you look at here, this 170 area, it was this price back in February, came back down, retouched it, and we bounced again. So like I said, this was staying the same price back in February and into March. Pretty much the same thing. Like I said, like if you're buying options in the stock, I mean the stock was literally the same price for a month a whole month straight. So you just gotta be you gotta be careful about that. That you gotta catch the moves. Yes, Apple does move, as you can see, but if you're buying things in here and it's like, oh, I bought something for Friday expiration, I mean, you're just gonna get bled out. You know Apple moves, but if it's at a place where it just wants to stay the same, that's what it's gonna do. But when the stock is moving, you definitely want to concentrate on areas of support and resistance. And as you can see up in here, there's also some resistance up in here as well. And then looks like you want to probably build another line here now, is in terms of resistance for it to kind of revisit. So, I would say my target, if I was going to play right now, where it fell last time, I would probably want to play like the 190. So I'd be good till, okay, I would say like, okay, wait, maybe when the 190 or even the 185 mark, be long to like 185, 190. I mean, you kind of want to play the area. You don't want to be like, oh, if it didn't hit 190, I'm not going to take my profits. Like, you kind of get it a couple dollars. Tesla. Okay, Tesla, I would say, is a good one because it has a lot of areas of resistance and support. And this one, you kind of have to go from looking at this, you can kind of tell, there are some areas of resistance up here, such as like the 380 area right up in here, where hit 380, fell, hit 380, fell. Excuse me. Allergies are still kicking. And then as you can see up here, it hit like 372 and then it came back down. So like I said, you got to be careful when it starts getting to these known resistance. And I'm not going to say it right here. You're going to find out. I'm going to show you in a second why I'm going to say that. But let's go to the 2-year to kind of show you a better time frame. Because technically, if you're looking at this chart for in terms of support, down in here is not, I would say, not the strongest support. So here it did bounce, came back up. Here it bounced, came back up. However, now it's just been on this constant downtrend, and then it broke that area a few weeks ago, or about a month ago, broke that area, but it did come back up to this 250 line. So it did fall, but it came back up to 250, but it was very short term, and as you can see now, just broke. So when a chart breaks like that, you really want to go to the multi-year, either 2-year, the 3-year, and try to find, hey, what's the next area of support? Oh, this is the 2-year, not seeing any support. But as you can see, where I was saying up in here, you can kind of see that this trend has continued over the last couple of years, this 389 area. I can kind of extend that to you. So as you can see that, I just extended that. This area has been there for a while, but you can see it does have some areas of support, and these areas of resistance have been here for a while. So that's why you got to be very cautious. So in terms of support, we got to go to the 3-year. So actually, let me minimize myself here a little bit so you can see better. So now if we're going back to the 3-year down here, and I would say it's a bit stronger support than what we're used to seeing. We come back down here, and you can see it hit this and it started to bounce. It went from 176.99 to 193.60 in 24 hours. So definitely when a chart breaks like that, you're gonna have to go back 2 years, 3 years, 4 years, 5 years to kind of see, hey, where was the last support? If it just keeps falling, where was the last support? And as you can see, resistance is multi-year. So is support. Here's support down here, and here's where it's bouncing. So that's an example of going back more than a year, 52 weeks, to kind of show you that you need to go back a little bit further sometimes. The 1-year chart does break, like when we were having when the market was crashing last winter in December and October, November, the market kept going down, down, down. The charts were all broken. They were all over the place. People didn't know where to go. And you just got to go back in time. Like, where was this? When was the last time it was 176? It wasn't always 176 or 150 or 180. You got to go back. You got to go back in time, and you can figure this out. But you got to take the time to learn. You got to take the time to study the charts, and you got to take the time to understand the stocks that you're trading. I've said this before. Each stock has its own personality. You got to get used to how it trades, how it moves, and some stocks you like how they move. Some stocks you don't. Like, there's some stocks people do well at that I don't, and there's some stocks I probably do well at that you probably don't do well at, and that's just the way it is. It's not because you're a better trader or I'm a better trader or so and so's a better trader. It's just you find what works for you. You kind of have to play with it, and some things just click for some people and sometimes they don't, and that's okay. You may be better trading real. As you know, I trade a lot of tech stocks because that's what I like to do. I like tech. I like to learn about tech. I like to study its moves, and I like that. Retail, not so exciting for me. I don't like trading retail that much. I mean, I do from time to time when there's opportunity, but then there's some people that really like to trade retail, like Costco or Macy's and all that kind of stuff. So at the end, you really just got to find what works for you. I hope this video was helpful. If it was, hit the like button. If you want to subscribe, hit subscribe, and the links are below for our options trading group and our Discord. Stay safe, stay green. It's always us versus herd.